I almost skipped the news this morning. Another day full of headlines, another round of speculation, another cycle of hype and noise. But then something caught my eye. XRP quietly crossed an $800 million milestone in inflows from exchange-traded funds, and hardly anyone was talking about it. No big social media frenzy, no dramatic charts being blasted everywhere, nothing. It was just sitting there, calmly waiting to be noticed. And once I saw it, I could not unsee it. In a span of just about 2 weeks, XRP managed to do something that took Ethereum nearly 3 entire months. That alone made me sit up and pay attention. And if you hold XRP, or even if you are just trying to understand where the next wave of opportunity might be forming, stay with me, because the deeper I went into this story, the more it felt like a quiet turning point, one that could shape the future of XRP far more than a single price candle ever could. Let me lay it out the way I discovered it. A cluster of new XRP exchange-traded funds launched recently, and combined, they have already attracted roughly $824 million from investors. Yes, $824 million. That is not a typo or a rounding convenience. That is real money flowing in, and it is flowing in fast. When I first read that number, I paused. I wanted to be sure I had not misread something. Because for years, XRP has been caught in cycles of doubt, legal battles, and skepticism. For years, it has been the crypto that people either defended with passion or dismissed entirely. Yet now, suddenly, almost quietly, institutions were pouring in. What makes this even more impressive is the speed. Those $800+ million arrived in just around 13 trading days. 13 days. Not 13 weeks, not 13 months, 13 days. That instantly made XRP the second fastest crypto asset in history to cross that milestone via exchange-traded funds. Only Bitcoin managed to do it faster, and that was during a frenzy where everyone and their neighbor's neighbor was piling in at once. Bitcoin did it in about 2 days. Ethereum, on the other hand, needed around 95 trading days. That is roughly 3 full months of Wall Street activity to cross the same line, and XRP just calmly stepped over it in 13 days. Now compare that with Solana. Solana's exchange-traded funds actually launched earlier than XRP's. They had a head start of about 2 full weeks, but even with that head start, Solana's funds are now sitting around $650 million in inflows after 25 days. Again, respectable, impressive even, but nowhere near the $800+ million that XRP gathered in almost half the time. So, that got me thinking, why is institutional money suddenly flowing toward XRP with such urgency? Why now? What changed? To answer that, I had to zoom out and understand the bigger picture. First, these exchange-traded funds finally give institutions a clean, regulated and familiar entry point into XRP. Think about it. If you are a pension fund manager or an investment advisor at a big firm, you cannot just sign up to an exchange, go through the Know Your Customer checks, buy a bag of XRP, and store it on a hardware wallet. That is not how regulated finance works. Those institutions need structure, compliance, and custodial safeguards. Exchange-traded funds provide all of that. Buying a share of an XRP exchange-traded fund is as easy as buying a share of any traditional stock. There is no private key management, no exchange outages to worry about, no concerns about withdrawal freezes. It is simple and familiar. So, part of this inflow is likely pent-up demand that had been waiting on the sidelines for a compliant doorway. Then, once that doorway opened, the money rushed through. But that is not the whole explanation. There is more. Ripple has spent the last year reshaping the infrastructure around XRP to make it more institutionally attractive. They expanded licensing in regions like Singapore. They launched a new dollar-backed stablecoin on the XRP ledger. They acquired companies in custody, brokerage services, and treasury tools. Whether you love Ripple's influence or prefer XRP's decentralized roots, you cannot deny that these moves make institutional investors feel more comfortable stepping in. For them, they see maturity. They see a growing ecosystem. They see legal clarity after the long battles. They see lower regulatory uncertainty. All of that adds up to confidence. But here is where things get even more interesting. At the same time XRP was receiving these huge inflows, Bitcoin's exchange-traded funds were experiencing outflows in the billions. Ethereum's funds saw nearly $1 billion pulled out. Even Solana, which had been having a strong run, only managed a few $100 million in the same period. Meanwhile, XRP just kept receiving inflow after inflow after inflow. That tells me something very specific. This is not just general bullishness spilling over onto all assets. It looks more like a rotation or a strategic rebalancing, with some investors choosing XRP as a new target of interest. Now, if you follow XRP closely, you might assume that $800+ million of inflows would cause the price to launch into the stratosphere. Surely, all that demand would crunch the available supply and send the chart upward. But, surprisingly, that is not what happened. Instead, XRP's price actually fell by around 20% during those 2 weeks. It is hovering near that $2 range, depending on the exact timing. And that puzzled me, because how do you have massive buying pressure without a corresponding price reaction? That is where the story gets even deeper. When you look at blockchain data, analysts noticed something fascinating. While institutions were buying through the exchange-traded funds, some very large holders, commonly known as whales, were using that institutional demand as an exit route. Imagine you have held tens or hundreds of millions of XRP tokens through years of volatility. You have seen the highs, the lows, the lawsuit drama, the community debates, the rumors, the predictions, and everything in between. Suddenly, you finally have a window where large, steady buying pressure is available through regulated funds. That is a perfect moment to quietly offload some or all of your holdings. And according to data from several analytics firms, that is exactly what happened. The number of mega whale XRP wallets, those holding at least 100 million XRP tokens, dropped by about 20% over a couple of months. That means some large holders reduced or exited positions. That supply, instead of hitting the open market and causing chaos, was absorbed by the steady institutional inflows from the exchange-traded funds. Picture it like a reservoir. Whale outflows on one side, ETF inflows on the other, and the water level stays stable. That explains why the price stayed flat, or even drifted downward. So, we have a fascinating dynamic unfolding. Institutions are entering. Some long-time whales are leaving. Supply is shifting hands. Price is staying calm. But underneath that calm surface, major redistribution is happening. And redistribution often precedes transformation. Now, before we go any further, I need to insert this essential message. This might shock you, but I am not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright, with that said, let's talk about something I take very seriously in crypto: preparedness. If there is one thing I have learned over the years, it is that you never want to depend on a single exchange. That is why I always sign up for and complete identity verification on multiple exchanges, what I call my Plan A, Plan B, and Plan C setup. If one platform goes down due to overload, technical failure, or regulatory pressure, I always have backups ready. And I recommend others take this approach too. Every exchange link I provide on my website is an affiliate link that supports the channel, and I always appreciate those who choose to use them. But whether you use my links or not, I strongly recommend building a multi-exchange plan, because when volatility hits, accessibility becomes everything. On the exchange topic, I have partnered with Kraken for a limited time promotion. If you create an account through the link on my website and trade at least $100 worth of any non-stablecoin crypto within 30 days, Kraken will add $25 worth of XRP to your account as a reward. It is a great way to accumulate XRP while also setting up a new exchange account that could become invaluable during peak market conditions. Again, the link is on my website. and it is an affiliate link that supports the channel. Now, let's talk about security. No matter how reliable an exchange might seem, I do not store large amounts of crypto on them. Long-term holdings belong in self-custody. I personally use Ledger hardware wallets to keep my crypto offline and safe. When buying any hardware wallet, always buy directly from the official manufacturer. Never purchase from a third-party marketplace. I have seen too many horror stories over the years. I do have an affiliate link on my website that goes straight to Ledger's official store. Using it supports the channel if you choose to do so, and I appreciate it. But, however you buy hardware wallets, always prioritize security. Now, before we circle back to XRP, let me share something from my own crypto journey. Lately, I have been experimenting with Unity nodes, a project from World Mobile and the Minutes Network. I purchased a Unity node license that included 200 node slots. I am starting small, setting up 10 phones to run the nodes as a test. If the test goes well, I may scale up gradually. And the part I find exciting is that I can choose to receive rewards in Bitcoin, Ethereum, Cardano, or XRP. For me, that is another way to passively accumulate crypto over time. Unity nodes are not the main subject of this video, but they are part of my ongoing journey in exploring new technologies and reward models in the crypto space. People should always do their own research. I will include a link in the description for those who want to read their light paper or look at their rewards calculator. Now, let's back up and look at the bigger XRP picture one more time. The $800+ million of inflows represent something deeper than just a number. They represent recognition, validation, confidence from entities that have historically been slow and cautious when it comes to crypto. For years, XRP has been dismissed by some as outdated or irrelevant. For years, critics argued that XRP's best days were behind it. And yet, here we are. XRP just became the third crypto in history to cross the $800 million mark in exchange-traded fund inflows, and it did it faster than Ethereum. That is not small. That is not incidental. That is not background noise. But we must remain vigilant. One strong streak of inflows does not determine the long-term trajectory of any asset. XRP will need to show resilience across market cycles. It will need to remain competitive as new technologies emerge. It will need to continue attracting inflows even when the hype cools down. However, what stands out to me is the quietness of this moment. There was no huge celebration on social media, no dramatic announcements, no frenzy, just institutions placing their bets quietly and steadily, while the price remained stable enough for big holders to exit. This is the type of moment that often gets recognized only in hindsight. In crypto, price and value do not always move together. Sometimes value is built in silence. Sometimes the biggest shifts happen without fireworks. And sometimes, when the noise eventually fades, the market finally catches up. So as I wrap this up, here is my takeaway. XRP is in a moment of transformation, not hype-driven transformation, not speculative transformation, but structural transformation. And whether the market realizes it today, in a month, or in a year, the foundation being laid right now could become incredibly important. If you enjoyed this expanded breakdown and want more deep dive storytelling content like this, go ahead and hit the subscribe button. There is much more to come, and I want you along for the ride.